Hello everyone, welcome back. Welcome to the last week of the month. Next week we already have NFP again. So it's going to be a pretty hectic end of the week. Plus, of course, because of some Jackson Hole Symposium event comments that we're going to dive a little bit deeper today. But today, this week is the last week of the month. Therefore, we starts Monday already. Starts on September 1st of Monday. Okay, so it's going to be a pretty interesting week next week. But what was today? I want to talk a little bit about what was the principal insights that I've got. What was the main insights that I've got from the Jackson Hole 2025 that was happening last year. There's a few things I've marked it up. 5 of them here that are most important in a sense. There are moving the markets, as we could see US dollar tanking, and then we saw just correcting itself slowly but surely. We had euro dollar, of course any US dollar pair that had the US dollar on the base would suffer a very big loss, and on the quote would suffer a very big win in a sense. So we've seen euro dollar, for instance, going up in a 4-hour candle, very, very bullish, and then now going down again. So it's not even above the 1.17, the all-time highs of this year. So we still have a bit of more strength to get to my target at 1.20 on euro dollar. US dollar CAD, for instance, dropped. We had US dollar Japanese yen, for instance, dropped as well. But all of them pretty much now back to the same before the comments. Okay, but before we go any further, I just need to get some things said. The first one is today is Wednesday, so we do have the webinar from 4 to 5 p.m. Make sure to join the Telegram to get the link. So join the Telegram on the description, and then soon it hits 4 p.m. in Australia time, Sydney time more specifically, I will be sending the Zoom link for you to join. It's free, we don't charge you anything, and most important, of course, don't forget to subscribe to the channel and give us a thumbs up and share this content with your friends. Now, what were the principal insights from Jackson Hole of 2025? That's exactly what I want to talk with you guys. I haven't noted down here because it's quite a few things, but mainly of them, as I say, that the many things, but from those 1,000 things that I've heard, I think 5 of them are the most important ones. Okay, so the first one is the shift toward the interest rates cut. Well, Powell signaled that he's very open, okay? Open in a sense of he's willing to introduce more cuts than he were before. So before he was a very data dependent. So he was, of course, going with the data. I mean by if the CPI declines, if the PPI declines, if the NFP declines, I have a possibility of cutting the interest rates into the next meeting. The next meeting, for those who don't know, will be on 17th of September, okay? So in about 3 weeks from now. So he's shifting towards a more dovish instance, a dovish tone, okay? And he said that with exactly words, shifting balance of risks, and that this is emerging the weakness in the labor market. So basically, he thinks that with the rates where it is at the moment, with the inflation rate it is at the moment, is the longer tail of the US economy is basically reducing the labor market. So if the labor market is reduced, that means only one thing, that the population won't have much money on the pocket as they used to have before, okay? So if we go in 2018, 2020, let's say not even that back, but 5 years ago, 6 years ago, we saw that the job numbers were, hitting consistently highs every time. And then now we see that we are declining, and we just had the last meeting on the last NFP was really, really bad. Was expected to have 140, 130,000, and it went up to be ended up to be 70,000. So basically half of what was expected. Beginning of the year as well was a really, really bad numbers. So there's signs that the inflation may be reluctant going back and not continue to go up because of population that has no money to spend anymore. Okay. So now the markets are expecting, if we go to the CME Fed Watch Tool, we can see that the markets are expecting, the overnight swap rates are expecting now between 80 to 91% chance of a 25 basis point cut in September. And that's very, very, very plausible, okay? Because I am expecting a cut, and I've say I'm expecting at least 50 basis points cut for the last 3 meetings that they have, September, October, and December, okay? So I guess that these last 3 meetings will be very important and will shape the future of the US dollar and also the US President Trump government for the next year and the next 3 years. The next 3 years they're going forward. Okay, so with that probability, it's a pretty high probability. It would have to be something really out of the trails to to show a difference on that probability, but I continue to believe that there is a possibility of a 25 basis points cut into 17th of September. Now, just going a little bit off topic now, if we go for October and December, that is the last 2 meetings of the Fed, we can see that there is a slow growing probability of a 50 basis point cut into December, okay? Because October, there's no expectations of a cut, all right? So they're going to cut 25 basis points. So they are 425 to 450 now. They're going to go to 4 to 425. And then October, the market is still expecting 4 to 425 rates, no changes. And then going to December, that's where most likely we're going to be seeing maybe a 50 basis point cut, okay? So with that being said, I highly believe that maybe we will get some sort of, growing expectations of a 50 basis point cut. That would drag a 75 basis point cut in total for the next 3 meetings, okay? 25 September, nothing in October, and 50 in December. There is a probability, but I'm not too sure if that's going to happen or not. If we see the data weakness a lot, because as I say, the first thing is that the shift is toward the interest rates cut, and the Powell is signaling he's open to rate cuts. So if there is possibility, most likely we will get. Okay, so just keep that in mind, that between 50 to 75 is still on the table. Now, the second thing that I've thought was very interesting was the dovish tone with persistent caution. All right, so Powell balanced the optimism with the caution. All right, he's very cautious, but he's very optimistic about the rates and about the economy. He keeps emphasizing that the inflation risks is, particularly those coming from the tariffs and also the immigration constraints. He affirmed that the policy remains data dependent because of those 3 things. So, in a sense, I've mentioned that 1,000 times already, that the tariffs are something good in a sense, but very bad for the economy in the longer run. And, when you're a president, you want something to be good for the longer run. You don't want something to be good for now or for tomorrow or for this week or for this month. You want something to be good for the next 4 years, 5 years, 10 years, right? So people remember you as something you've done good for the population and for the society. Now, he's saying that the inflation risk is particularly, coming from the tariffs and also the immigration constraints is the 2 worries that he have the most about that. And that's a very dovish tone, in my opinion, okay? So just don't forget that if the tariffs continue to rise, most likely the inflation will continue to rise in certain instances. Just making sure you guys understand that. If US President Trump, Donald J. Trump, continue to impose tariffs in, all of the countries and, just continue to do that, we may have a problem, and that problem will possibly be very dramatic into the inflation. And if we have a problem into the inflation, rise in inflation, then we're going to get we're not going to get cuts from the Fed. And that's what we want at the moment. in my opinion, okay, because the inflation and the population the rates and the population are very struggling at the moment in US, in my opinion, especially within no jobs into the labor market. Now, the third one is the monetary policy framework updated. So I'm going to read it out, what I've put it up here, because it's a little bit tricky, but afterwards I'm going to explain with my own words. But basically the Fed is shifting the framework of the monetary policy, so the MPC, okay? The policy framework, sorry. So they are basically forgetting about the makeup strategy that they had, and they are trying to soften the language regarding employment shortfalls. Remember what I've just said, because the labor market is very shrinking, and it's shrinking at a point that it's not supposed to be. So they are just, forget about the makeup strategy, and let's now be a little bit more soft towards let's be a little bit more soft towards what the job numbers say and what we say about the jobs number, okay? So this basically, in my opinion, shows that they are focusing in the flexibility rather than on the numbers in itself, and they're looking for be flexible rather than, affirming above target inflation to make up for past undershots. So, I think that's the third most important point about the meeting. And it's one of its kind, because we don't usually listen Jerome Powell saying that. We don't usually see, somewhere Jerome Powell saying that he's abandoning, he's forgetting about a strategy and making up another strategy. So it will be very interesting to see how the market will, because they're going to change. So basically what this means is they're going to change the way they talk to the public into the day of the Monetary Policy Committee. That being said, the market is looking at one side of how to do that, and now they are looking at another side of how to do that. Okay, so it's really interesting to see how the market will try to match with the expectations that are now different from before. So basically nothing as the market was expecting. So now how they will meet in the middle and get an actual pricing for the market, if you know what I mean. Okay, so hopefully you guys understood that. I will be explaining these topics more in depth today into the webinar, but just so we're going through that. Now, the fourth point is the rising political pressure and the questions over the Fed independence, because I find this one very interesting, because Jerome Powell has been saying a lot, Donald Trump has been saying a lot that he's going to fire Jerome Powell. And that's a very, I would say, important announcement in a sense, but it's a very attacked an announcement. And if he doesn't do that, now will we trust on what he's saying? And if he does that, how independent the Fed really is? Okay, so that's my main point. It's a knife, or it's a double sword knife. You can't catch it, and it's falling. You can't catch it, otherwise you're gonna cut yourself. So just really try to pay attention on to how we're going to develop this in the next coming months. And now, as I say, the fifth one is it's the last but not most important. The less important, sorry. It's the focus has been changing, and now it's more into the labor market and the structural shift. So the symposium theme was counter on the labor markets in transition, demographics, productivity, and macroeconomic policy. So that basically showing to me that they had much more talked about the labor market and how Jerome Powell shifted their strategy. I don't know the strategy, but we're going to find out on 17th of December when he gives his speech. It's going to be much different from what it was before. So how he's going to talk about, how he's going to approach, what's going to be the forecast, what's going to be the projections for the labor market and for the inflation. Okay, so these are my top 5 most important, I would say, topics discussed on the Jackson Hole Symposium event, and I hope you could get something out of this. In my opinion, having a very concise outlook, very simple outlook here, it will be a short on US dollar, a continuation of euro strength, and a continuation of a Japanese yen strength as well. Okay, so looking to short US dollar, Japanese yen, looking to long euro dollar. In my opinion, I still see euro dollar, and it's much more closer than ever to 120 until end of this year. And US dollar, Japanese yen, we can maybe see at 140 and maybe even 138 by December. Guys, thank you so much. I know it's a little bit of a longer video, but I had to take this time and explain for everyone here. If you have any questions, please come today into the webinar and make sure to join the Telegram as well. Thank you so much. Have a great day, and I chat to you soon, or I see you in the webinar this afternoon. Bye-bye.